In today's video, we're diving back into the ongoing saga of one of the most puzzling companies in the EV world, Aptera. For nearly 2 decades, Aptera has been chasing the dream of building an ultra-efficient, solar-powered electric tricycle. It's a bold vision that has yet to deliver even a single production vehicle. Since 2006, this company has gone bankrupt once, relaunched, and burned through over $150 million raised from retail investors through equity crowdfunding. And yet, all these years later, the dream remains just that, a dream. On October 16, 2025, Aptera finally listed its shares on the NASDAQ. You'd expect this to be a celebratory milestone, the culmination of years of innovation. Instead, it was a disaster. Within hours of trading, the stock price collapsed by over 60%, wiping out years of investor optimism in a single trading day. Why did this happen? What went wrong? And does Aptera have any realistic chance of survival? Let's break it all down. Aptera's story is one of persistence and repeated disappointment. Since its original founding in 2006, the company has promised to revolutionize personal transport with a solar-assisted tricycle that combines futuristic design and extreme efficiency. The problem? They've been developing that tricycle ever since, and have yet to sell one to a customer. Over the past 5 years alone, Aptera has raised about $150 million from more than $20,000 retail investors through crowdfunding campaigns. Those investors poured their money in with no way to cash out until now. When Aptera decided to list its shares directly on NASDAQ, many hoped they could finally sell their holdings. But once the market opened, reality hit. The stock price plummeted almost instantly and finished its first day down 60%. With little institutional interest and a shaky business model, the market didn't see promise. It saw risk. Massive risk. Aptera couldn't even pull off a traditional IPO because no institutional investors were interested. Instead, the company opted for a direct listing, meaning no new money was raised. Existing investors could just sell their shares to whoever was willing to buy. For thousands of early backers, this was their first chance to exit after years of being stuck in an illiquid investment. Unsurprisingly, many rushed to sell, and the result was a brutal price collapse. The next few weeks will likely bring more pain. With no real revenue, no production, and mounting skepticism, Aptera's share price may drift toward zero unless something changes fast. According to Aptera's own filings from October 14, 2025, the company claims it has substantially completed its production intent vehicle design. But note the wording, substantially completed means not actually completed. They've built 5 drivable prototypes since 2019, labeled Alpha, Hermes, and Artemis among them. But none are the final production model. Their next planned prototype, called Gemini, doesn't yet exist. The company describes it as a production weight validation vehicle, whatever that means. Essentially, it's supposed to be the same weight as a final production vehicle, but not necessarily the final version itself. So despite nearly 2 decades of effort and tens of millions of dollars spent, Aptera is still in the prototype phase. 5 test vehicles. 0 deliveries. Aptera's funding story reads like a case study in slow-motion desperation. Yes, they raised about $150 million from small investors. But crowdfunding money trickles in over time, not in a single lump sum. That's barely enough to keep the lights on and pay staff, let alone fund a factory. Back in June 2024, the company tried to raise $60 million from institutional investors, promising that would be enough to begin low-volume production by the end of the year. Investors weren't convinced. That round failed spectacularly. In their latest prospectus, Aptera admits it missed its previous targets to begin production in 2025 because it couldn't secure funding, and they still don't have a fully validated design. Gemini, the so-called production prototype, is still just a plan on paper. After the failed funding attempts, Aptera turned to a new deal, a $75 million equity line of credit from New Circle Capital. Under the terms, Aptera can sell newly issued shares to New Circle at a 4% discount to the current market price. The problem? That market price is collapsing. The cheaper the stock gets, the fewer dollars Aptera can raise. If the price keeps falling, even this $75 million safety net could become useless. It's a classic catch-22. They need money to inspire confidence, but they need confidence to get money. The day before its NASDAQ debut, Aptera released an online roadshow video hyping up its listing. The presentation included bold claims that they already had a production facility ready and that they'd received a $21.9 million grant from the California Energy Commission, CEC. But here's the truth buried in their filings. They've only received $2.5 million of that grant. To unlock the remaining $19 million, they must manufacture and sell 50 vehicles by February 2026 and 500 by October 2026. Even their own co-CEO, Chris Anthony, admitted production wouldn't start until mid to late 2026. That means they'll miss those milestones completely. So when Aptera used that grant to hype investor confidence, it was, at best, deeply misleading. Aptera also boasted about having a production facility in place. But the location in question isn't a factory. It's their corporate headquarters in Carlsbad, California, a suburban office building. Imagine trying to mass-produce vehicles in an office park surrounded by residential streets. There's no room for truck deliveries, no large-scale assembly area, and no supply chain infrastructure. Even if they somehow manage to build a few hundred vehicles there, the costs will be astronomical. Without economies of scale, each vehicle's cost could easily surpass its sale price. Aptera plans to sell its futuristic tricycles for around $40,000 each. That's a hefty price for a three-wheeled vehicle that hasn't been proven on the road. By comparison, the Chevy Bolt EV, a full-fledged electric car, starts at about $29,000. Aptera claims nearly 50,000 reservations, but those are based on $100 refundable deposits, essentially expressions of interest, not commitments. When or if production ever begins, it's unclear how many of those would turn into actual sales. Now we come to one of the most striking parts of Aptera's marketing, their solar claim. The company insists its solar panels can recharge the vehicle's battery for up to 40 miles of free driving per day. It's an incredible promise, the idea that you might never need to plug in. But the math doesn't add up. Aptera's own co-CEO has repeatedly said the panels can generate about 700 watts at peak and produce 4,000 watt-hours per day. Enough, they say, for that 40-mile range. But these numbers fall apart under scrutiny. In an interview, Aptera's lead solar engineer admitted the panels actually produce closer to 500 watts, and only under ideal conditions, the kind you'd never get in real life unless you parked with your hatch open and pointed directly at the sun all day. Then there's sunlight. Even the sunniest areas of the U.S., like southern Arizona, average around 5.5 hours of peak sunlight daily, not the near-perfect 6 hours Aptera assumes. And most customers will park their vehicle in driveways or under partial shade, further reducing real output. Lastly, Aptera claims its vehicle consumes 100 watt-hours per mile, a figure that's never been independently verified. In fact, the only efficiency number they've ever shared publicly from a 2025 test drive was 122 watt-hours per mile. And that trip was mostly downhill from Arizona to California. Combine all these factors, and the real-world solar contribution drops dramatically. Realistically, most users would see 10 miles per day, not 40. That's not a small exaggeration. It's a massive overstatement. The 40 miles of solar range claim has been repeated for years, but the physics simply don't support it. Aptera also claims it's already selling solar panels to other companies. One example they gave was Polydrops, a trailer manufacturer supposedly buying Aptera's solar panels for its products. In their May 2025 statements, Aptera said they'd begun deliveries of solar panels to Polydrops. Yet their second quarter financial report showed zero revenue and zero deferred revenue. That means no payments had been received and no pending invoices existed at that time. So, if they've been shipping panels since May, why wasn't a single dollar recorded? The numbers simply don't line up, suggesting that either these were unpaid trial shipments or marketing exaggerations disguised as sales. Now, we get to the part many investors feared. Between 2019 and 2025, Aptera raised about $147 million through equity crowdfunding. During that time, the company set its own share prices, with no market to verify them. By 2024, shares sold to retail investors were priced around 10 to 14 each. But before going public, Aptera executed a 1-for-3 reverse stock split. Adjusted for that, early investors effectively paid $40 per share. When trading opened, the stock closed at $8. That's an immediate 75–80% loss for anyone who believed in the company early on. Thousands of everyday investors, people who thought they were funding the future of sustainable transportation, have watched their money evaporate. It's a harsh reminder of what can happen when crowdfunding hype meets market reality. Finally, let's touch on Aptera's favorite talking point: saving the planet. The company often promotes its tricycles as a way to reduce emissions and fight climate change. But one recent claim from co-CEO Chris Anthony took that logic to a new, almost comical level. He said that each Aptera vehicle put on the road is equivalent to taking 10 combustion cars off the road. 10! The math behind that statement? Non-existent. It's pure marketing fluff, and a fitting metaphor for Aptera's entire journey. A story of big promises, unverified claims, and dwindling credibility. Aptera's debut on NASDAQ should have been its moment of triumph. Instead, it became a public reckoning. Years of hype, incomplete prototypes, unrealistic promises, and questionable finances have finally caught up with them. The stock market doesn't run on dreams. It runs on confidence, performance, and proof. And right now, Aptera has none of those. Maybe they'll secure their $75 million line of credit. Maybe they'll actually build that elusive production prototype. But for now, the only thing Aptera is producing is disappointment. What do you think? Can Aptera still turn it around? Or is this the final chapter of an idea that flew too close to the sun?